Hi, I hope everyone had a good weekend. So for this week, we will continue discussing on the analysis and interpretation of financial statements. But now, we will move on to financial ratio analysis. Diba last week, we discussed about vertical analysis, which is the process of comparing figures in the financial statement of a single period wherein we express each line item as a percentage of a base figure. On the other hand, horizontal analysis is the process of comparing figures of FS for two or more periods. So, naara ang atong mga akong gihatag ng mga equations for vertical and horizontal analysis. Then, for this week, like I said, mag-move on na punta sa financial ratio analysis. So, our learning goals, reconstructing balance sheet and income statement using financial ratios, evaluating company performance using horizontal, vertical, and ratio analysis, and interpreting changes in the financial structure of the company. So, ratio analysis or financial ratio analysis is one of the three ways to analyze financial statements, the other two being the vertical and horizontal analysis. So, ratio analysis involves methods of calculating and interpreting financial ratios to analyze and monitor the business performance. Financial statement analysis using financial ratios typically make use of two financial statements. So first is we have the income statement and second we have the balance sheet. There are a lot of financial ratios but moingon ra ko daan nga gamay ra ang akong ni pick ra ko og few nga akong i-discuss para ninyo. So kani akong mga gipili is kanang mga sayon ra og kanang mga most used financial ratios. So like I said, mag-use ta og an income statement and balance sheet. So kani natay income statement ni Armor Trading for 2019 and 2020. Then we have balance sheet gihapon ni Armor Trading for 2019 and 2020. So kaning duha ka financial statements ang atong referan para sa atong mga examples later on. Financial ratios can be subdivided into categories according to their functions and what type of company performance do they measure. So, the first category that I will discuss is liquidity ratios. As we all know, liquidity is the ability to satisfy our currently maturing obligations. So, liquidity ratios can provide early signs of cash flow problems, and liquidity ratios also help us determine kung enough ra ba ang atong current assets to satisfy or settle our current liabilities. So the first financial ratio is current ratio. Current ratio measures the ability to pay for our current liabilities using our current assets. So the formula is current assets divided by current liabilities. Diba sa yun ra kayo? So, illustration, compute for Armor's current ratio. So, to get the current ratio, we need to determine first pila ang atong current assets o current liabilities. So, we will take a look at our balance sheet. Natay balance sheet dire. So, dire ta sa 2020 mag-refer. We have our total current assets which is 122,300. Then, our current liabilities of 62,000. So, going back, compute for Armor's current ratio. Pila to atong current assets? 122,300 divided by our current liabilities of 62,000. So, we have the current ratio of 1.97. So, ang current ratio ni Armor for 2020 is 1.97. So, unsa may significance aning 1.97? So, if your current ratio is more than 1 or equal to 1, It means that the firm is able to pay its current liabilities using its current assets. On the other hand, if less than 1 ang atong current ratio, it means nga dili enough ang atong current assets to pay for our current liabilities. So next is we have the quick ratio, or also known as the acid test ratio. So quick ratio measures the ability to pay our current liabilities using our most liquid assets. So it is a better measurement of liquidity if our inventory cannot be easily converted to cash. So, mauna nga, quick ratio ang tawag niya because ang current assets, dili tanang current assets, katurang mga assets nga quick bitaw nga can be quickly converted into cash. So, we have our formula, quick assets divided by current liabilities. Unsa man ni atong quick assets? So, ang atong quick assets is just our current assets less our inventory. Nga naman, kay naman ko mga businesses nga ang ilang inventory is dugay bitaw mabaligya. For example, kanang wine industry, di ba? Ang ilang inventory is padugayon pa man nila. So dugay siya mabaligya. So ang measurement nga appropriate para nila is quick ratio. So for our example, compute for our Morse quick ratio. So mabalik na punta sa atong balance sheet. Mag-need ta og current assets na to, which is 122,300. Then, ang atong inventories, 28,900. So, 122,300 minus our inventories nga 28,900. So, natay quick assets nga 93,400. Divided by ang atong current liabilities na 62,000. So, 1.51. So, may meaning ani. So, if our quick ratio is greater than 1, we can pay our current liabilities using our quick assets only. Nya, kung less than 1, so dili enough ang atong quick assets to pay for our current liabilities. Nga na siya kasayon. Diba? So, next is, we have the next category, which is activity ratios. Activity ratios measures how fast the firm uses its assets to generate revenue and income. So, kani is mag-deal ta ani sa other assets na pod. Kung unsa kapaspas nato sila gamiton para maka-generate ta og sales or income. So, we have inventory turnover. Inventory turnover indicates if excessive, unproductive inventories are held that may lessen company's profitability. So, nag-determine siya if nabatay mga excess inventories or kanang mga excessive or kanang mga unproductive nga inventories. So, we have the formula, cost of sales divided by average inventory. So, unsa na ito pagkuha sa average inventory? We have beginning inventory plus ending inventory divided by 2. Or if starting pabitaw on the first year of operations pabitaw ang atong company, pwede ta ang atong beginning inventory is 0, unya atong ending inventory divide by 2. So compute for our Morse inventory turnover. So mobalik tag tan-aw sa atong income man. Balance sheet. So, unsa to atong kinahanglan? Natay beginning inventory, kaning ending sa 2019, which is 30,000. Nya, we have our ending inventory, which is 28,900. So, going back, cost of sales. Cost of sales DI. So, mutan-aw ta sa atong income statement. Cost of sales, kani cost of goods sold for 2020 is 208,800. So 208,800 divided by ang atong average inventory. Average inventory of Ang atong average inventory is 29,450. O, kana. So, 208,800 divided by 29,450, we have our inventory turnover of 7.09. So, sa may significance ani? Businesses with highly perishable products are expected to have higher inventory turnover. The quicker the inventories are sold, the higher its turnover. So, kung ano siya, depende rin siya sa kanang company standards bitaw if unsa ang ilang desirable nga inventory turnover, or pwede nato siya i-compare ang atong turnover, i-compare nato sa turnover sa ubang company. So kaning 7.09 relative ang atong interpretation ani. Then next we have the average age of inventory. So as what the name suggests, it measures how fast inventories are sold. So we have formula 365 divided by inventory turnover ratio. So our illustration, compute for the average age. We have 365, then ang atong inventory turnover ganina, which is 7.09. So we have 51.48 days. So it takes 51.48 days for us to sell our inventories. Businesses with highly perishable products are expected to have lower age of inventory. So ganina bitaw ang atong inventory is kung highly perishable gani ang imong product, higher inventory turnover, pero lower age of inventory. Unya, the quicker the inventories are sold, ganina, the higher its inventory turnover. Then karon, the lower its age naman. So, kung inventory turnover gani, kung turnover, higher na siya. Unya, ang average age dapat lower. So, same pud na siya sa turnover kanang depende na sa kung unsa ang standards sa atong company, or pwede pud siya nato i-compare sa average age of inventory sa ubang businesses. Then next we have average collection period. So average collection period measures the number of days to collect a receivable. So ang atong formula, accounts receivable divided by annual sales over 365. So, computing the ACP of our more, we have we should get our annual sales kani 307,400. Unya ang atong accounts receivable. Accounts receivable nato kani 50,300. So, computing, we have 307,400 divided by 365. Unya, ang atong 50,300 divided by kaning 842.19. So we have 59.73 days. So it takes us 59.73 days to collect our receivables. ACP helps evaluate the effectivity of the business collection policies. The faster receivables are collected, the lower its average collection period. So, kani siya, depende ra pud ang atong interpretation ani is depende sa atong company policy. So, for example, nag-set ta og standard nga dapat ang atong receivable ma-collect siya within 50 days. Unya ang atong ACP nga na compute is 59.73 days. So late ka og 9.73 days. So we can use this as to evaluate kung unsa di ay ka-effective ang atong collection policies. Nganong kanang maka-assess bitaw ta nganong dugay man ta og 9.73 days nga na. So depende ra ang ACP interpretation is depende sa atong giset nga standard for our ACP, or like I said, pwede po siya nato i-compare sa ACP sa ubang company. The next is average payment period. Kung ang ACP is number of days before a receivable is collected, kaning average payment period is the number of days before we settle our payables. So, instead of accounts receivable, i-change ra nato siya accounts payable. Then, ang atong annual purchases divided by 365. So, computing Armor's APP, atong accounts payable nato is ni 38,200. Unya, annual purchases, mag-assume ra ta nga mag-assume ra ta nga 70% of our cost of goods sold is this year ra gipalit. Kaning 7, so 208, 800 man ang atong COGS. Then mag-assume kaning 70% is ato ra na siyang gi-assume, pero if maghatag kog problem is mag-specify man ko if pila ang annual purchases. So kani is gi-assume ra nato nga 70% ang iyang 70% of the cost of goods sold is this year niya gipalit. So we have the APP of Armor of 95.4 days. So meaning kana it takes us 95.4 days to pay our payables. So the faster payables are paid, the lower its average payment period. Creditors often require a certain threshold of APP before granting businesses credit lines. So, if mag-apply taog ka ng credit line sa atong creditor or supplier, usahay kay mag-ask man na sila if na sila ka ng required bitaw nga APP. So, i-evaluate na to, i-assess na to if ang atong APP is pasok ba sa ilang standards. Then we have total asset turnover, which indicates efficiency in which the business uses assets to generate sales. So ang formula nato is sales over total assets. So computing Armor's total asset turnover, we have our sales of 307,400 unya divided by our total assets of 359,700. So 307,400 divided by 359,700. So naatay divided by 359,700. Natay 0.85. Ang atong total asset turnover is 0.85. The higher the total asset turnover, the more effective assets are used to generate sales. So, kung gihapon na ang interpretation is depende sa company standards and we can use this also to compare total asset turnovers between companies in the same industry. Next is we have debt ratios. Debt ratios measures the percentage of funds provided by our creditors. So debt ratio, the formula is total liabilities divided by total assets. So going back to our example, ang atong total assets is 359,700. Unya ang atong total liabilities is 164,300. So i-divide nato na silang duha. So Armor's total debt ratio is 46%. The higher the debt ratio, the greater the amount of debt finance investments are used by the business. Some banks and lenders require a certain level of debt ratio when granting loans. So, before if mga apply gani tag loan sa bank or sa sa mga lenders, sometimes kay mangayo man na sila pila ang atong debt ratio. Namang gud sila kanang threshold if unsa nga level of debt ratio ra ang ilang i-allow. So, in this case, ang debt ratio ni Armor is 0.46 or 46%. So, it means 46% of its assets are financed by outside creditors. Then next is we have profitability ratios. Profitability ratios measures earnings in relation to some base figure such as sales, assets, or capital. So first we have net profit margin. Familiar ta ani? Net profit margin is the percentage of net income to sales. So that's why we have the formula net income divided by sales. So, magtan-aw ta sa atong income statement. Unsa man atong net income? Kani, 22,100 divided by our sales, which is 307,400. So, we have our net profit margin of 7.19%. So, the higher the net profit margin, the better it is for the business. Then we have our GPR, our gross profit ratio. The formula is gross profit divided by sales. So it measures the gross profit percentage on sales to recover OPEX or operating expenses. Diba ang atong gross profit is the difference between our total sales less our cost of goods sold. Mao na ang atong gross profit. Kunya, kanang gross profit is diha tamag deduct sa atong operating expenses, kanang mga administrative expense, kanang mga distribution expense, diha ta mag-minus sa atong gross profit. So, going back to our example, computing Armor's GPR. So, we have our gross profit of 98,600 divided by our sales, which is 307,400. So, our GPR is 32.07%. So, mara good siya gyapon. The higher the GPR, the better it is for the business. So, kanang net profit margin o GPR, pwede ra na nato siya kanang i-compare sa other companies kung pila pod ang ilang profit margin o gross profit ratio, or kanang i-compare nato siya sa company sa standards nga giset sa atong company. So next we have EPS or earnings per share. It measures the ability to generate income for every share outstanding. So ang atong formula is earnings available for common shareholders divided by the number of common shares outstanding. So we have our earnings available for common stockholders, 22,100. Unya, ang atong outstanding common shares, kaning 7,640 shares in 2020. 7,600 in 2019. So, pagka 2020 is natay 7,640 shares na issued and outstanding. Meaning, naay nag-own anang 7,640 shares. So, going back, atong earnings available for common shareholders is 22,100 divided by total number of common shares outstanding of or 7,640. So, we have 7,640. We have 2.89. So, for every share outstanding, natay 2.89 na income ana. So, investors check and compare EPS of different businesses to help them decide which business to invest in. So, kanang mga investors is mag-check na sila sa EPS sa mga businesses para kanang to help them decide if mas better ba nga diri sila mo invest or diri sa pikas company na. Then we have ROI or return on investment. So, it measures the overall effectiveness of management in generating profits from its available assets. So, ang formula nato is earnings available for common shareholders divided by total assets. So, computing Armor's ROI, we have our earnings available for common stockholders of 22,100 divided by our total assets, 359,700. So, we have 6.5% So, ang atong ROI is 6.14%. Meaning, for every peso nga atong capital, 6.14% ana ang ma-return as income. So, the higher the ROI, the more effective the management is in using their assets to generate profits. So, natay mga cautions in using ratio analysis. First is, ratios that reflect large deviations from the norm only indicate the possibility of a problem. Additional analysis is needed to determine whether there is a problem. So, kung, di ba, nag-solve naman ta sa atong financial ratios, then, makakita ta nga, hala, lahi man ni siya sa kanang industry standard or layo man ni siya sa atong standard. So, that alone doesn't mean nga nadyo'y problema, but it indicates possible nga naay problema. Kay, dili man na siya, one ratio is not enough to judge the overall performance. So, kana is, dili man enough nga sa one ratio rata mag-base, then mag-conclude na dayon tanga na ay problem. So, dapat, we will need further analysis to determine whether nabadyo'y problema or kung ano siya kanang isolated case ra siya. So, second, a single ratio does not generally provide sufficient information to judge the overall performance of the firm. So, like I said, dili enough ang one ratio ra ang atong i-analyze. So, dapat mixture of financial ratios na siya para maka-arrive ta sa kanang correct conclusion about the company. Anya, third, compare ratios calculated using financial statements dated at the same point in time during the year, or else effects of seasonality may produce erroneous conclusions and decisions. So, kani, if si company A ang iyang financial statements is calendar year, so meaning January to December ang iyang cycle. Unya, kani si company B is fiscal year ang iyang gigamit, meaning dili siya January to December, kuan siya August to July, inga na ang iyang cycle. So, dili nimo siya ma-compare si company A ug company B kay dili man good same ang ilang cycle. Ano man ni? Dili same ang ilang cycle. So, possibly, ang ilang financial ratios is maglahi jud kay naa may effects of seasonality. Next, we have using audited financial statements to reflect the business true financial condition. Kaning mag-use ta og audited financial statements kay during the audit possible man gud nga naay changes na makita si auditor, kanang naay, for example, sa atong pag-make sa FS is natay mga human error, due to human error is naay mga misstatements, then makita na siya ni auditor, so ma-change pa ni auditor ang atong financial statements. So, that's why it is advisable nga if mag-analysis ganita is we will use audited financial statements. Next is, financial data being compared should have been developed using the same accounting treatments and policies. Same ra ni siya. Kaning si company A is ang iyang gigamit in measuring its inventory is weighted average. Unya, si company B, ang gigamit niya in measuring inventories is FIFO, first in, first out. So, possible nga maglahi jud na sila kanang financial ratios. Probably, lahi sila inventory turnover, dili nimo ma-compare ang ilang mga financial ratios kay lahi man ang ilang accounting treatments and measurements nga gigamit. So, next is, inflation may distort analysis results because some assets differ from their current replacement value. So, na-mention rin ako sa previous modules nga ang atong financial statements using uses historical value or book value. So if naay inflation nga mahitabo, if naay kanang mga effects bitaw sa inflation, is dili na siya kaayo makit-an sa financial statements. So natay chapter quiz on financial statements. Mao ni ang atong quiz number 2. So ang coverage is module 2, 3, and 4. So kanang about financial statements, kanang review and preparation, unya analysis and interpretation. So ato na siyang i-upload ang quiz number 2 on Wednesday. So please refer na lang to my post if when ko mag-upload for your section. Nya naa day performance task nato for the prelim period. So creating an income statement and solving and interpreting financial ratios. So mao ni ang atong performance task. So maghimo mo og financial statement pero given na nako ang kanang mga details, so inyo na siyang i-arrange o kanang i-label. Then natay financial ratio analysis. So kani mag-compute mo og current ratio unya kanang mag-decide mo. Then i-upload ra pud ni nako. Ang further instructions is i-include ra pud nako sa template nga akong i-upload. So please be guided na lang. So if na may mga pangutana, feel free to chat me sa MS Teams kung naa may pangutana or kanang mo comment mo sa kanang akong i-post sa atong queries nga channel. So thank you and I hope kanang magtuon mo kay hapit na ba atong prelims. So mao to siya. Thank you so much.